What's up, Quasar, the world, the internet, people who care about the stock market and politics and money? Hope you're all doing fantastic. Dave, how are you, my man?
Fantastic. Another beautiful day in paradise.
Yes.
Here we are.
Yes. We are. We were here. It's going to be a great week. I'll be in Dallas the majority of this week. So if we get a chance to visit any people out there in Dallas, feel free to hit me up. Message me out there on Twitter. The economy lost some jobs in July, and the unemployment rate fell anyway. So that's kind of cool. Payroll fell 23,000 against a consensus near 80,000 was the goal, positive 80,000. So we lost 23, thought we were going to gain 80, and labor force shrank by 264,000. But I mean, that's not good, by the way, but no one mentioned that anywhere. Like, that's not even almost a headline that popped up anywhere that I saw. What about you, big guy?
These numbers are wonky. The theory is that it's a lot of people self-deporting. And so there's a lot of people leaving the workforce, and that lot of people leaving the workforce are also leaving the country. So that's why that number's like that. And that's also, so that affects the underlying number. So that's like the thing I watch really closely is unemployment, focusing on unemployment benefits. And people are not doing it, right? Like they're not going in and saying, hey, I'm unemployed, I need unemployment benefits. If that number is actually trending down, that means that people are disappearing. Where are they disappearing to? Well, they're disappearing out of the country. And that's tough, particularly in skilled trades, particularly in service sector, particularly in a lot of different places. And that pushes inflation up. We see that in a lot of different places. I mean, besides the human cost of it, it also pushes things like inflation up.
Sure. Yeah. Of course. I mean, that's the thesis across the board so often as we get on here is inflation is still going higher, as is the stock market. I mean, we keep hitting new all-time highs pretty much every time we look around. Tuesday, Wednesday of last week, we made new all-time highs on the S&P 500, and Friday we closed higher than ever before in human history. So we're gonna keep going.
On top of all this, like tech is cut more jobs this year than all of last year, and companies are saying, "Hey, it's not AI." Okay, cool. And also, wages have slowed down to 3.2% annually. Oh, yay. And
yay.
Prices are way up. Inflation is running. So the government says inflation is 3.5%. Yeah. And it's up 3.5% on what they measure, right?
Yeah.
I mean, the reality of it is that diesel, which runs everything, like everything has to be like shipped on diesel. It has to be trucked on diesel, everything. The electricity in your house is probably coming in through diesel and gas and jet fuel. All of those things are 45% more expensive than February. So that's got to go somewhere.
Right. Yeah, it does.
But good news.
The
stock market is up really high.
Higher than ever before. Every single day, almost. It just feels like it's getting higher and higher. And we're probably going to continue this week, truthfully.
Right.
Yeah. I mean, looking at everything, there's definitely some things that are coming out there. But speaking about diesel, Iran named its price for reopening the Strait of Hormuz. Iran's Supreme National Security Council demanded the U.S. lift its naval blockade and sanctions, asked to withdraw the forces from the region, pay war reparations, and release frozen assets before the strait opens, which I feel like I've read that before.
Well, I love that understatement. That sounds familiar. Yeah, of course, because Donald Trump realizes on the war that Israel and the United States started in this giant Pearl Harbor attack, there isn't any win war now button.
Right.
And then the Iranians are like, oh, well, look at the Straits of Hormuz. And then, the United States blocks it. So history, we've all lived this history. So here's what's real coming through is that the world is running on reserves, and reserves will run out. And when it does, it's called demand destruction. And demand destruction is also code for a really, really bad day. And the extra doesn't come from anywhere. Like there's a lot that's just, not happening. And without that big win war now button, we're just waiting on the Iranians and the Omanis to figure out a deal between them. And it looks like it has. And the Trump administration has said something remarkable on Sunday, which is like, maybe this war thing isn't working out. Like, duh, we've been saying that since March. And maybe we're just going to focus on economics. So he's essentially setting up, we're backing off on this and you guys figure it out. I don't know. He's said we're either going to, destroy civilization today, and tomorrow it's like, they're good guys, and who knows, right? The real aspect of this is real for all of us, and it's the U.S. and Israel essentially having a big whoopsie, and we're all paying the price. Nothing new here.
Yes.
Just hoping the Iranians figure it out, and we are at their largesse at the moment.
That's correct. Yeah, nothing new at all. And you're talking about March. So again, this is just such an interesting chart to even look at and notice. But what we will all see is, so you had the January and then the January, February, March debacle. This is mostly Iran situation going on here. And then we had a couple of mentions of everything going to be okay type of situation. But what really happened is the market figured out what Trump was doing, which again, this is the most highly manipulated market in human history. And the stocks just skyrocket. Really, really big push. That was fun. And then really from June until now, we had a pretty good pullback on the broader markets. This was about a 12% dip. Doesn't look like that or feel like that, but that's just kind of what happens after this big of a move. Bottom of March to top of June was a 34% move. Which is really, really, really massive. Yeah, really massive. And again, very similar characteristics of COVID in a lot of fashions, where you had this global issue going on with Trump as the president, with a drop in decline in January, February, and March, and then a massive rally, and a little bit of a pullback. And then again, pre-market or post-market, looks like we're going to trade up a little bit higher. Here's the futures, which is the NASDAQ ETF, NASDAQ futures. So again, right now we're printing a little bit of a bull candle. We're up 0.27%. And again, this was just a really nice, calm, pretty easy pullback to plan and to strategize for. And now we're back off to the races. And then XLE, which is the energy ETF. Energy is just at this really, really interesting intersection right now of, will it go higher or will it go lower? And my general thesis is that this should kind of break to the upside and we should go higher. But again, you mentioned the forced demand issue, right? That's going to be a big one. So I think that's kind of what everything's waiting on, is if and when do the reserves run out. Do we have a general timeline or date on that, Mr. Dave Conley?
No, nobody is willing to stick their neck out because it's never happened before, right?
Yeah.
So we're in this point of, so even the experts are saying, we should be hearing from Exxon. We should be hearing from Shell. We should be hearing from the major players. We should be hearing from Saudi Aramco. And there's also we don't want to panic the world. But on the other hand, we're all adults and we should be planning for these things. So where do we get any extra? And the sad part of this, and this has been known for 60 years, is that there is no extra hanging out. Ghana, Brazil, Venezuela is actually offline. Remember that earthquake they had just a few weeks ago? Yeah, that wasn't good. There's nothing from Russia. Russia has already said, hey, we're not exporting any diesel, and everybody's mad at Russia, so nothing's going to happen there. And Saudi is actually going down. It's not going up. So yeah, there's a lot coming off. And again, really, really bad day underneath all of that. That's the no bueno. We know this is coming. We don't know when. And the what do they call it? The panicans don't know if it's a cliff or if this is a headwind that is going to happen, which is going to happen for a really long time, because there's also this you got to refill and you've got to get it back in the pipeline, no pun intended. And all of that takes time. It moves by ship. It takes a bunch of weeks. And so just normalizing from this, that's without fixing the damage everywhere. Now, that's just me reading. I know nothing other than reading. So I don't know. It turns out oil is really complicated. So yeah, it's not good. Don't know when it could get bad, and don't know how bad it's going to be, but nothing is saying green light.
Yeah, I agree. I agree with you on that. And it's weird and unique and interesting to watch. But from a financial standpoint, the really good news is, as long as everyone knows, in my personal opinion, if you feel the pinch of inflation, which I know you have to, the really only way to outrun it right now is to beat it. And the way you beat it is you hyperinflate your assets, right? You as a consumer, you as an individual, you as a person, you have to inflate your assets, which means that your value of your portfolio, the dollars that you hold in your account, they need to increase with this increasing stock market. If you can find really great trading opportunities, and there's a few of them out there, take advantage of them and play the cards that we're given right now. So here's a big one, which is Google. So Google has had 4 pretty deep drops in a row recently. We just had an amazing earnings. The earnings is what caused Google, truthfully, to go down 21%. So they had amazing earnings in May, and they just slowly pulled back all the way until, again, a really phenomenal earnings. They did $119 billion in a quarter. But look at their earnings per share. They estimated $2.87. They reported $9.11 earnings per share, which is wild town. And then they were down on that earnings, which was insane. And so I know you picked up some bullish positions on Google after that happened, because you had to, because that didn't make any sense for it to be down that low. Really good run up. And so now I'm expecting something like this to happen on Google. Again, earnings are good. Fundamentals are good. The trend is good on the overall market. To me, it just looks like this is going to slowly move higher. And then Robinhood right now is being pinched in between the 100 and 200 daily moving averages, but the weekly 100 is still slowly creeping up. Last week, you had an inside week on Robinhood, which just to me means that this is a lot of waiting and compression, but there's so many strong fundamentals that are going down on Robinhood right now, especially with the Trump administration has greenlighted them to be the people, or the brokerage, to allow so many other platforms to happen and people to come on there. So there's a lot of opportunities, man. It looks good.
Let me quiz you on a few that are on my mind. SpaceX. Last week we were talking about lockups and all. So like, is there going to be what's going to happen with that? But they rocketed up like 16%. What do you? Kind of my favorite. SpaceX is rocketing up. There's too many puns.
Yeah, too many puns. Yeah, no, they did. They survived. They had a good earnings and they went down, which was huge. So stock was down 14% on earnings. And again, earnings actually were okay for the most part. But that's when I exited all of my bear positions. That was my big plan, was to hold over earnings. I held over earnings. And so the big earnings gap down, huge move in one day. And yeah, survived lockup. Lockup came up. Everyone was fine. All good. Big support area held. So now you have a short-term little double bottom here on SpaceX. Personal plan is let it rotate, go a little bit higher, and then back into 150 is where I short again. Or at least that's where I plan on doing something bearish. Again, I could be wrong on that spot, but 150 down into 130 and then higher, that's fine. I have no problem with SpaceX going higher. I'm not like perma bear on it at all. It's a great industry. It's a great sector. This just seemed like a very reasonable IPO move, but some good volume coming in. Today it's up pre-market. And again, my thought process would be let it gap up, trade down into probably 127, 125 over the next 2 or 3 days, and then trade up into 150. And then at 150, so I'll play some bull move on the way up. And then at 150, look for some ride on the way back down.
All right, one last one. The one that we talked about a lot last year, Airbnb. It went up like 17% last week. I think it's been basically sideways for almost a decade, it seems like.
Yeah, that is correct. That is correct. So here's Airbnb. Airbnb, huge move on earnings. They finally got a couple things right. Here's the long-term monthly chart. So yes, it is still extremely sideways. This is essentially the price that IPO'd at in 2020. So 6 years later, hasn't really done a whole lot different, but they did do 3.6 billion in revenue, top line revenue over earnings. And yeah, there was just a lot that finally kind of got right from a moving average standpoint and a trend standpoint, but this is a really strong gap on Airbnb. And I guess the big question for me and probably others, is this finally the time where we start to see some movements, and everyone is using this platform and they are making actual money. Can it trade up into 217 again? And I think the answer is yes. So
look at that
stock looks
volume.
viable,
Yeah.
buy the pullback, especially if you use it. If you travel the world ever and you ever use Airbnb for your services, which I do, why not?
Awesome. Anything for the upcoming week that you're stoked about?
Nothing specific. No. Don't
Okay.
have anything that I'm watching extremely closely. But super pumped, everyone, to be here. And thanks for letting us pour into each other. And then we'll see you all Tuesday, Thursday with myself, Dave, and Steve.